All right. Good afternoon, everyone, and thanks for joining us today on another one of our virtual homebuyer seminars here at Michigan First Mortgage. We have got quite the subject for you today, something that is near and dear to me and I'm very passionate about. And I'm joined with two other passionate gentlemen today to talk about ways to go ahead and getting your credit back in shape. As before, all attendees will be muted today. Of course, the call will be recorded for posterity's sake and available on our website for you to review and or share with others. And if you have questions today, which you may have some, this is a very detailed topic, feel free to drop them into the question and answer section. And if we have time available by the end of the call, we'll go over some of those, be able to answer them for you. So let's get us started today. Nice to meet everybody. My name is Grant Spencer. I'm the mortgage branch manager here at Michigan First, and I'm joined today with two subject matter experts. We have Mr. Jim Cook and we have Sonny Morton as well, who will tell you a little bit about themselves in just a quick moment here. Can I get the slide beforehand, if that's all right? All right. Thank you for that. And again, today we're going to be talking about getting your credit in shape. There's a number of rules to credit algorithms and how they score. Lastly, about 367 by my last count. We'll be going over some of those and some of the detailed questions, as well as some tips and tricks in order to be able to go ahead and get your credit into better shape. As always, we're going to have some takeaways at the end here for you as well to share with others. And we'll go over some closing remarks. And with that, let me go ahead and hand it over here for a little bit of introductions. First, I'm going to start with Mr. Jim Cook, who's been with us for quite some time. Jim, let me hand it over to you. Let's tell us a little about yourself, sir. Jim, you're on mute.
Sorry about that. I have to unmute myself. So yes, good afternoon, everyone. My name is Jim Cook. I am a mortgage loan officer here at Michigan First, have been here for about 8 years. Obviously, one of the things that we look at every single day is credit. We have discussions with applicants for mortgage loans and members about credit. And so over the time that I've been in the industry, I've developed a number of, as Grant said, tips, tricks, suggestions, processes that help you to improve your credit, knowing that that's one of the biggest sort of hurdles to becoming a homeowner. So I'm glad to be here, and I hope I'm able to bring some good information and benefit to you all. Thanks, Grant.
Thanks, Jim. Appreciate that. Switching gears, we'll be talking to Sonny Morton over here. Sonny's also been in the real estate game for quite some time and has some experience in different facets of our industry. Sonny, tell us a little bit about yourself.
Hi, thank you. I'm just grateful for the opportunity to speak with you today. My name is Sonny Morton, and I'm a realtor at Bowers Realty and Investment. And one of the things that we focus on at Bowers is actually furthering, let's say, regular home buyers and their knowledge and their ability to buy homes. It's so many different programs, and Michigan First is, I have to say, leading, one of the leaders in programs to help people become homeowners. At this stage now, when you come out to buy a home, sometimes it is more cost effective to buy a home than rent a home. And also, a lot of times the qualifications are less. So, just trying to get that knowledge out to homeowners so, they can just become homeowners and, just have that experience.
Thank you for that, Sonny. I know it's really important to be able to educate our clients as they go through the process. And credit is such an incredibly large part of that. And so this is where we're going to start the conversation today. And everyone in attendance, you'll be surprised how quickly this will end up going. Gentlemen, I'm going to start first with Jim. Jim, why is credit important for a homeowner?
Well, credit is important for a homeowner because it's going to determine a number of options for financing your home purchase. If you have cash to pay for a home, which very few people do, Great. Credit is not an issue. Most of us, when we buy a home, we finance it. So credit is going to determine if you qualify. But beyond that, it also has a big role to play in what doors are opened to you in terms of programs, lower down payment options, sometimes assistance with down payment, and rate as well. So it's not just a matter of sort of a black or white, either you qualify for financing or not. The bigger issue is how many options you have available, what doors are open, what choices do you have?
Well put. Well put. Higher credit scores give more options to people in the end, allowing them to go ahead and have more flexibility. To your point, Jim, for sure. And I guess this one's over here for Sonny. Sonny, we've experienced this a number of times over the years. You have somebody who doesn't have an established credit score, or perhaps maybe they had a financial setback in the past. How do they go ahead and establish credit going forward?
Actually, I love that question. Well, the first step is to get in front of someone that knows what they're talking about. Too many times I see people take on the adventure just thinking, let me just go pay my old collections. And suddenly now I think they have good credit. And I try to explain to new homeowners and people about trying to repair their credit. Actually, when you just pay your old collections off, you just paid off some old people you owe. It's more also about having open accounts, showing and establishing where, people can see how you pay today, not so much as what you've done in the past.
It's a really good response and a good segue over here for Jim. Jim, when you have borrowers that approach you, members that maybe have outstanding collections, as Sonny was pointing out before, that might be a little bit old, should borrowers just naturally be paying off collections if they owe them on their credit report?
It's not a question that can just be simply answered yes or no. What we generally will recommend is that if you're in the period where you're establishing your credit and you're planning to buy a home in the long term, probably the answer is yes, pay those off, move forward. If you're in the middle of trying to buy currently, then we advise people to sort of pump the brakes on that, hold on, let's see what is required for a given program, and then we'll provide advice because that's the better way to sort of assess the best use of your resources. In some cases, you may be required to pay off collections, and that's never a bad idea. But at times, we need to determine in what order we do this. Do we pay off collections to qualify for a home, or are we okay moving forward, buying a home, putting the financing in place, and then working on collections after? So it's a little more complicated, but I think in the large picture, it's always good to pay off any debt that you have.
I think it's a pretty true statement as well. And this actually goes to one of your points that you just brought up about strategy when a borrower is looking to get qualified to go purchase a home. The question is it ever okay to close a credit card account?
Oh, good question. Oh, sorry.
Go ahead, Sonny.
I was gonna say, well, I'm gonna always say every situation is subject to, okay? But what happens is when you normally close down a credit account, if it does have a good history, what you're telling the machine is this is something I had open and that's current. And the machine just likes to see it counts, let's say it matters more what you have open and what you have currently reporting than an account you used to have. And as it gets older, it's just gonna maybe not as matter as much to the computer. Or let's say the credit score calculation.
The algorithm that's used to be able to calculate the score. Yeah, I'm with you for
Yeah.
sure on that one. Uh, something that we hear a lot. I'm sure both you gentlemen do from your clients, and I'm going to hand this one over to Jim to answer. Jim, we've got all of the different apps of the world and the opportunities through different creditors to learn what your credit score is through Vantage, right? The algorithm that's been out by TransUnion for a number of years. And most borrowers and lenders talk FICO in this world. So I'm going to hand it over to you. Can you talk to us a little bit about the differences between a Vantage score and a FICO score and why a lender might use one or another?
Really good question, Grant. And this is one I think you'll nod your head to this. We this is a friction we have in on a daily basis when we're coaching potential homeowners on what to do about credit, how to prepare, and what credit scores they would expect to see us use in evaluating their application for a loan. And the reason is that we, as you said, we use currently in the mortgage industry a tri-merge credit report, which is the classic old school credit bureaus with their scores and their information. Most people thinking of making a big purchase like a home are probably using a credit monitoring service like Credit Karma, or many of you may have access to another monitoring service through a credit card that you have a relationship with, et cetera. So what's a little bit different is the standard bureaus are probably looking at really life of credit, whereas the Vantage, as you referred to it, the monitoring services, they're looking at a much shorter term, mostly focused on the last 2 years. So you're going to see that there are some variations, some differences in the scores. And so when you're looking at your monitoring services, your score is a legitimate score on that model, but it may not match up with what we use in the mortgage lending industry. I don't think that necessarily means you shouldn't use these services. And I always tell people that the biggest benefit is a trend line. So if you're using a monitoring service and it's telling you, here's your score and here's what you could do to improve your score by 20 points, that's legitimate information. Those are probably good steps to take, and you will get that increase in your score. But think of it more as a trend line than a direct match to the scores we're going to use when we're evaluating your mortgage loan application. I think that answers your question.
It does, certainly. And I'll flip the same question actually over to you, Sonny, as I'm sure that you have clients and who come into your office with their Vantage scores and talk about wanting to get approved for a mortgage. What kind of advice do you give to a borrower when they come in with a Vantage score and they're looking to get approved and you're looking to refer them to a lender?
Oh, definitely. That's a great question. Well, a lot of times what I do is I refer them to Jim, to be honest. Normally when you get a lot of times people are different, let's say Credit Karma, different reporting agencies, and the scores vary so much from when the lenders actually pull their credit scores to qualify them. So a lot of times we try to communicate with them in a way so they can understand they're different, but sometimes it can cause, let's say, buyers sometimes already think they're pre-approved and ready to go, and sometimes they're 20 or 30 points lower than what they really what they thought they were.
And that happens often when we take a look at the differences between FICO and Vantage. I know that from my experience over the years, typically if you take a Vantage score and subtract about 30 to 40 points on average, that typically ends up being what a borrower's FICO score is. Of course, that's not anywhere a broad brush for all clients and all borrowers, just kind of a general rule of thumb. And I think that's a really good point as we're talking about Vantage versus FICO. A number of years ago, this was a big thing within the industry, and we heard it across the entire country. The credit repair organizations of the world will go ahead and fix issues that you've had in the past. I'm going to flip this. Jim, do organizations getting back? Buddy. All right. Okay.
Grant, I think you're asking about the credit repair services, third-party companies that can assist with an individual with their current challenges and make suggestions for what to do to improve or correct their credit background, credit scoring. And I think those, again, there's no yes, no, question. They can be useful. Typically, what I suggest to people is to find a not-for-profit organization that provides that service.
Definitely, Jim. If you don't mind, I'll piggyback while we wait.
Thank you.
You know what? I find this is one of the biggest things that happens with people when they're trying to take on the idea of fixing their credit or home ownership. The first thing they do is they respond to the TV commercials. And they believe that's the best way to start is maybe, it's so many different. I'm not going to say a certain company, but and what happens a lot of times is they're actually just calling their different creditors and putting you on payment plans. It's so many different things, but they're charging you a countless number of dollars to do it. It's so many, so really take the time out. Not that credit repair is not a good thing, but take the time out to find out what it actually is going on. There's great resources now as far as credit repair. I don't want to just say take anyone, but start referencing YouTube. You can find out a lot of things about the different companies by searching on YouTube about credit experiences and different things you can do to work on your credit.
Looks like we may have lost Grant, so our host. So I apologize for that. We'll try to keep this thing moving forward.
We
so
should
that,
be back here and running.
There we go.
Thanks
All
for that.
right.
Yeah,
Great.
we gotta love technology, don't we, everybody? Fantastic.
Yeah.
I did catch the last bit of that, Sonny, and I think there's something that we can kind of expound upon in regards to that. What if somebody sees something that's incorrect on their credit report? Perhaps maybe a debt that isn't theirs that was given to someone who has a similar name that was attached to their credit report, or perhaps maybe something they don't believe is truly theirs from years ago. What steps can they take to go ahead and correct that?
Oh, okay, great. One of the things that they can do is they can reach out to the different credit bureaus. Now, it is important that they reach out to all three credit bureaus to make the dispute because sometimes that's the reason credit scores are different because some credit reporting agencies have information others don't. But what you do is you reach out to each company. You can do it online now or you can actually do it in writing. Me personally, I tell you to write a letter disputing it. All you need is the information, the account information, your ID, and the information for the account. And just, report in what, information, any proof you might have that it's not yours. Sometimes just showing a different address they might have might be a good way also to turn in. But once you turn in to the credit reporting agencies, they have up to 30 days to respond and let you know what they came back with. So if they don't come back with something, they're actually supposed to delete the account.
Excellent response. Excellent response. That brings up something that a lot of consumers have struggled with before in the past. And there is a simple way to do it these days. I'm going to hand this one over to Jim. Jim, if somebody's interested in purchasing a home and wants to get a copy of their credit report prior to applying, just to know where they stand and what information's out there on their TRW, where can somebody go to get a copy of their credit report?
Yeah, I mean, you can Google this and you'll come up with the results easily. You go to mycreditreport.com, and the law permits or requires, I should say, the bureaus to provide you with a free copy of the contents of your credit report once each year. So you're entitled to that. It's a great idea to obtain that. Because without knowing exactly what's reporting, a score on its own in isolation is kind of, less useful. It needs the context. It's up to you to take that action, obtain that report annually for yourself.
And, I'm just going to stay with you on this one, Jim, because it kind of makes sense to our previous conversation. And how does someone monitor their credit score and take steps to improve their credit scores? How can they be knowledgeable?
I encourage people, if I talk to people early enough in their process that they have some time to prepare for their home purchase, I encourage them to engage in one of these credit monitoring services, to use it as a guide, as I said earlier, to use it to create a trend line, knowing that, as Grant just mentioned a few minutes ago, it's not going to be the exact score that we use, but the trend line is valuable, and the the tips or the suggestions that are provided through these services are useful and legitimate and great guidance.
Thanks for that, Jim. And this might be a bit of a loaded question, but I'll ask our realtor friend here first to see his response. So, Sonny, should a potential buyer or borrower talk to a lender first or a realtor first?
You know what? That is a loaded question, isn't it? All right. I'm gonna say what I would say anytime, okay? Me personally, I'm gonna always tell you, talk to a realtor first, just because a realtor can get you started in knowledge of the whole entire process. And like the earnest money, the money you're gonna need, the bidding process, just so you can get at least a understanding on what you might be taking on in the home process. But let me make it clear, the lender is the first thing you should do in the home buying process, so you can even find out what it's gonna take to buy a house.
Grant, I'll jump in and just, I'm going to be the diplomat here. Okay. Uh, it doesn't matter who you call, because if you call the right loan officer or the right real estate agent, you're getting a team. That person already has, it's the same thing. You get the same result and the same experience if you're calling the right person.
Very diplomatic, Jim. Very diplomatic. All right, Jim, this question's for you. And this is for our folks on the call and driving them to the actual approval process here. When we talk about credit scores and the types of programs that somebody can qualify for, what kind of general credit scores would somebody be looking to have if they were looking for perhaps a conventional loan or FHA, maybe even a down payment assistance loan?
That's a good question, because again, it's one that, as Grant, you and I both know, every single day you have this conversation with potential home buyers. So there's not a really great one answer, you know, takes care of this information. You know, Obviously there's a sort of a bottom line where you can say, well, you've got to have a score of at least 580 to be considered for FHA lending, which allows you to put as little as 3.5% down. Could you qualify for lending with a score below 580? Yes. Will you forego the ability to use a low down payment? Also, yes. So as I said earlier, the score really drives what your options are, what doors are open to you. So there's not necessarily a minimum score, but it dictates how much you're going to have to put as a down payment and what your terms will be. To qualify for various forms of down payment assistance, things like that, kind of the basic rule is a score of 640 or greater. If you're looking for conventional lending with a low down payment, I'm going to say you're going to need to be about a 700 or higher, although some conventional with more down payment, you may qualify with a 680. Those are they're soft guidelines because there are exceptions. And I think what we're going to find out is that we don't meet the borrower with a list of requirements. We take the borrower and we figure out how we can make it work for each individual. Because every file, every applicant is unique.
Excellent response. And as we're starting to go ahead and round out the conversation today, I've got a question for both of you in this case. And that question really comes down to this: where can someone potentially find a vast resource of information on how they can change their credit scores, modify their credit scores, or put themselves in a better financial situation. I'll open it up to both of you on this and I'll finish us out.
Sonny, I'm gonna start here. I'll let you have it. Ed. I'll try to be quick. I'm going to do a quick ad for for Michigan First Credit Union and our partners in the credit union branches. When I have conversations with people who are interested in going on this home ownership journey, if they have questions and they have concerns and it's clear that they need to make some improvements, I will often suggest that they meet with a financial services representative in the credit union because there's a lot of suggestions, options, programs that the credit union can help you with to establish, correct, or improve credit.
Sonny, you want to add to that?
I love Jim's answer. I'm gonna actually touch base on something we talked about earlier. Jim said everyone's experience is unique. And one of the things I believe that most people should do if they're gonna try to take on the home buying process, through credit repair processes, talk to people that they know that have decent credit. Open up, communicate with some people that you actually know or who might have some knowledge that can give you someone that can help them. Too many times with the advertisements, people don't know if you should trust the plan. Go reach out to some people where you can get a referral with someone that you trust. That'll be one of the first things I would say. And the second part is it really comes down to taking the time out to pick a good loan officer like Jim. Jim is patient. I can name countless number of homeowners me and Jim have worked on that I would say wouldn't be homeowners if Jim Cook wasn't their loan officer. So that's what I would say for the most part. It really does come down to who you work with in the home buying process, realtor and loan officer, and it really changes your whole entire experience. And also with grant programs and down payment and money. I don't want to get long winded, but sometimes I've seen people come in from out of state and their closing costs be $12,000 and see that they could have had a program like Mishta. And instead of spending their 12,000, they could have kept it in their pocket and use that on their house and maybe had a $2,000 closing, but that's going through Michigan First because you guys do have some special programs. So I don't want to get too long winded, but it's just really get working with good people.
Great answers from both of you. Thank you very much for that. And we'll begin rounding out the rest of our conversation here as we move forward. So, I'd like to go ahead and talk about the three takeaways for the audience that you guys have prepared ahead of time. I'd like to first start with Jim. Jim, what are the three takeaways you'd like our audience to know about today?
Just real quick, it's start as early as possible. Do not drag your feet. Start the conversations with the people you know and trust, as well as loan officer, realtor. Meet with a mortgage professional, and that doesn't necessarily mean you have to drag everything into an office. We can do this over the phone, etc. Have a conversation where you get your questions answered. And again, there's no files that are the same. No one size fits all. We always find programs that work for you and meet you where you are.
Sonny, what are your takeaways for our audience?
Um, Don't be afraid. That's my first part. But it is so many different things that we can do to negotiate contracts. Like I was mentioning earlier, there's different grant programs. You got different down payment assistance programs. Sometimes also it's a lost art, but we can on different loan programs, we can get seller concessions. We can come in and get the seller to give you up to 3% of the sales price sometimes or in FHA, maybe even up to 6% in certain occasions. So there's so many different ways to get people in houses nowadays where it doesn't always come down to money and cash out of pocket. So that's important. Also, timing is important in the market. It's so many different things as far as bidding and the different myths that you hear about bidding. And there are some crazy things that go on. I think I heard a client tell me someone bid it 70,000 over asking price. So you might want to get a decent realtor to help you craft through how to make a good offer in this kind of different kind of market, and maybe give you some ideas on what to bid on and how to bid. And last but not least, the cost of living. The rental, it just doesn't, rental ends in one of two ways. Either you're going to give them a notice that you want to leave, or they're giving you a notice that they want you to leave. But there's going to be no money made. So, as far as us talking about credit, I work with people in different situations, and I always see this one thing. Everybody with great credit, their shoulders are back and confident. When I have people that have credit issues, they haven't taken it on yet, they normally slouch over and kind of like get ready, like they got to tell me a horror story. And it's not as bad as most times what people think. So, just take on the challenge.
I think that might be the biggest takeaway out of all of it. Let's not make it a horror story. Call us ahead of time so that we can go ahead and make your process and your life that much better when you buy a home. Thank you both for that. I appreciate that today. Here's how some of the information you can contact us with today. Anybody who's interested in touching base with Jim directly, his contact information is there on the page. He's in the bottom left there with that 313 number. Anybody just interested in chatting with us in general in regards to mortgage, please reach out to us either on our website, michiganfirst.com/mortgage, and or give us a call on our 800 number. We're available for you there as well. Anybody interested in chatting with Sonny about having him be an agent for them in the future, Sonny's information is on the right-hand side of the screen there, and he's available at sunnysiderealestate101@gmail.com. I want to thank you both, gentlemen, for coming on today and just do a quick shout out here for the Michigan First Insurance Agency. Yes, we do own our own insurance agency here at Michigan First in order to be able to serve our members in the most appropriate way possible. So if you're looking for insurance for your home, your auto, your pets, or any other types of insurance, please give us a call. A 5-minute conversation may truly change your life when it comes down to your insurance needs. And I'd like to go ahead and finish it up with that today. Thank you all for joining us. Any questions or concerns, please email us. We'll reach out to you when time. Thanks again, everyone, and have a great day.
Thanks, everybody.
Thank you. You're bad, man. Home run.
All right, Jim. Just wanted to say thank you. Ms. Lai.